Hiab's full year 2025 results have just been published. We reached a record high comparable operating profit margin of 13.7% despite decline in sales, showing the resilience of our business. Scott, how would you characterize the market environment in 2025 and our financial performance?
Yeah, thanks for the question, Aki. So 2025, I'd characterize it as follows. If you think about our demand environment, we're still operating and living in highly volatile times. So that continues. Then if you think about it a bit more detail, the market environment in both Europe, Middle East, Africa region, slightly recovering. So good positive variance year over year versus 24. Same for Asia Pacific region, a nice positive variance year over year. So we see a steady recovery throughout the year. And then the U.S., unfortunately, with the trade tensions, that's unfortunately negatively offset the recovery that we see in EMEA as well as APAC. So that continues on into 2026. So on balance, we still have a tough market to lean into. Now, as a result of the improvements in the two regions versus the softness in one region, our order intake remained on a similar level as compared to 2024. And I think now this makes 14 quarters in a row we're roughly on the same level. At the same time, due to the fact that we continue to work through our backlog, then the sales part of the equation, of course, we saw a year-over-year decline by 6%. However, it was nicely offset by the execution and the strategy and our intention to be able to still improve our relative profitability even in a soft market. So we were able to successfully do that. And then at the same time, because of the strength of our profitability and the good work that the team is doing on our net working capital, then we had yet another incredibly strong year of cash flow. So nicely positioned to continue to execute on the strategy. So big thanks to Team Hiab all over the world.
Yeah, and it was of course a historic year for Hiab because we became a standalone company and we had a number of nice strategic achievements of the year as well. So could you share some highlights from 2025?
Yeah, absolutely. So really proud of the work that the team has done in executing on the strategy, and so happy to have a chance to spotlight or put the spotlight on a few of the achievements. If you think about our growth strategy, you can think it through in three key pieces, essentially, on the growth part of the equation. So on the one hand, we talked about growing in key segments, waste and recycling, retail, last mile, construction, and defense logistics. So at least two of the four, we see nice developments towards the positive direction through the year. And in certain markets, we've gained share in construction, and others, perhaps we've stayed stable. But unfortunately, that market has yet to materialize with any level of tailwinds. But I'll come back to that point in just a second. Then on the other hand, defense logistics, the momentum continues to build. Our backlog or opportunity funnel continues to increase. Unfortunately, it's extremely difficult to anticipate the exact timing of when these opportunities will convert to orders won and then subsequently into revenue. But the factors look quite good in terms of growing in defense logistics. Then on the second vector that we talk about in our growth strategy is growing in North America. Really proud of the fact that we've now activated or signed agreements with 16 new dealers to date in North America, which gives us much broader coverage of that key economy and key geography. So we're well positioned to catalyze growth there. And then, of course, that's going to help us in the third vector, which of course is growing in our services business. So we've seen nice year-over-year positive variance there. Now, I said I'd come back to the construction part, and of course that's largely related to then successfully executing on our strategic acquisition of ING, which has a region-leading portfolio of loader cranes that are primarily utilized in construction and infrastructure applications. So quite complementary to the offering that we had in our Argos business. So a key piece of the puzzle in terms of growing in a critical segment for us in construction. So really pleased about that. And at the same time, we continue to execute in our Hiab Business Excellence as we were able to offset the declining sales with 100 basis points improvement in gross profit. And then, of course, at the same time, we continue to maintain a focus on keeping our fixed cost in line with the development of our order intake and then subsequently the revenue curve. So that's going along more or less on plan.
If we then turn the focus on 2026, how does our outlook look like and what are the assumptions behind it?
Yeah, no, great question. So coming back to how then I started in the demand environment. So we come into 26 with a couple of realities. And one is that our order book is now lower by 114 million euros. So the right way to think about that is 4 to 5 weeks or so potentially of less visibility of revenue recognition in the year. So that's a key factor. Number two, from a demand perspective, we continue to see nice positive momentum in both EMEA as well as APAC. On the other hand, that's offset by a continuing environment in the Americas and in particular in the U.S. business where that serves as somewhat of an offset. So the right way for us to think about going into the year in terms of the outlook is still a continued stable demand environment relative to each of the last 2 years. So then as a consequence of the reduced order book and no doubt potential for our revenue curve to match our trailing last 12 months order intake, then it was necessary to activate the cost savings program, which we've now communicated both internally as well as externally, of approximately 20 million euros. So as a consequence, we then set our outlook to be above 13%. However, it's important to keep in mind that outlook level actually is 100 basis points higher than each of the prior 2-year periods of time. And that embodies the confidence that we have in the gains that we've been able to make through our implementation of Hiab Business Excellence and the better gross profit margins. So those were the key considerations in establishing the outlook.
Okay, thank you, Scott.
Yeah. Thank you, Aki. And thanks to everybody for a nice 2025.